One of my favorite ways to invest my money is to invest with ETFs. And ETFs are some of the most diversified ways that you can invest your dollars. And Vanguard has some of the best ETFs out there. So today, we are going to break down Vanguard's most popular ETF, which is VTI, or the Vanguard Total Stock Market Index ETF. Now, if you're brand new to index fund investing, you may be asking yourself, well, what is an ETF? And an ETF just stands for Exchange Traded Fund. And all an ETF does is it's there to mirror an index. So say, for example, you're investing in something like a NASDAQ 100 ETF, then what you'd be investing in is something that mirrors exactly what the NASDAQ 100 does. Same thing goes if you invest in something like an S&P 500 ETF, and it's just going to mirror the S&P 500. Well, VTI mirrors the entire stock market. Now, ETFs and index funds are not exactly the same, but their returns are very, very similar. And there are differences, but they are slight. The first one is an ETF trades just like a stock. So anytime stocks are trading on the stock market, you can buy an ETF. And the second major difference is that ETFs have less expensive purchase prices, so they're more accessible to more people. Whereas an index fund, typically you have to pay between $3,000 to $10,000 to get into an index fund. With an ETF, you can get in for a couple $100. So this is a much more cost-effective way, especially if you are a brand new investor. So what does VTI track? Well, VTI tracks the stock market as a whole. In fact, right now at the time recording this, VTI is tracking 3,972 different companies. So you are extremely well diversified. And that is one of the first pros, is that VTI is one of the most diversified ETFs that you can invest your dollars in. Secondly, you get broad market exposure when you invest in something like VTI, meaning that you are owning all of these different companies, thousands and thousands of US-based companies, and you are going to get broad market exposure across a bunch of different sectors. I'm going to show you all the different sectors that you are going to be investing in here in a second, but you are going to get so much market exposure, including also getting international exposure, meaning that a lot of US-based companies work overseas to develop their products or they sell their products overseas as well. And so now that you have an understanding of what VTI is, let's get into some of the key stats of VTI so we can break this down at a deep level. All right, so here are some of the key stats. We get our stats from YCharts. If you've never checked out YCharts, there's a link up down below. You can get a 7-day free trial with YCharts. It is one of the most information-heavy websites that you can look at investing data. Some of the best data out there is on YCharts. And we're looking at the key stats here. So the expense ratio of VTI is 0.03%. So it is a very low-cost ETF. And that's one of the beautiful things about ETFs and, in addition, index funds. But typically, ETFs have even lower expense ratios than index funds. For example, VTSAX, which would be the index fund equivalent at Vanguard to VTI, would have a 0.04% expense ratio. So this is a little bit lower than even the index fund is. In addition, we have total assets under management here. So $282.72 billion are under management when it comes to VTI. And it has a 1.55% dividend yield. So a pretty good dividend yield. And here's a big one, the turnover ratio. The turnover ratio is only 4%, and you want this turnover ratio low. Why? Because the more stocks and bonds are being sold inside of a fund, the more taxes that you have to pay. So you want to make sure that this turnover ratio is that much lower. Now let's look at some of the key fundamentals here of VTI. Now, the number one thing that I really want you to look at, because the rest of it is just all-time equivalent, is the number of holdings. This holds 3,972 different companies. This is an amazing way to get your diversification. Now let's look at the total return over this time frame. We can look at the total return over the last 15 years, and then we'll look at the total return over the last 20 years. So you can look at this here and see that over the last 3 years, it has returned 7.76% at the time recording this. 5 years, 9.76%. Over the last 10 years, 12.07%. And over the last 15 years, 9.81%. But we can extend this timeline out even farther, and we can see over the last 20 years, it has returned 10.68%. In all time, it's returned 7.97%. And if you look at these total returns versus its peers here, you can see how it's returned against some other very popular funds like the S&P 500 total return, which is right there. You can see the S&P 500 ETF Trust. You can see all these other things like the Russell 1000 as well, which has a 6.67% all-time return. So you can see VTI has a very steady return that you can really build a ton of wealth with that 7.97% all-time return. But I care more about the last 20 years with a 10.68% rate of return. Now, obviously, historic returns are not indicative of what future results results will be. But historic returns are all we have to go on. So this is something where a lot of times it's just legal speak for a lot of people to say that because all we have is historical returns. So you have to look at historic returns when you are evaluating a company. Now, it could be very different in the future, absolutely. But at the same time, we want to look at historic returns to see how it has performed so that we can get a better idea of what's going to happen in the near future. Hey, listen, if you are getting value out of this video, make sure you give it a like. All right, so next, let's look at the different styles of stock exposure that you're getting. Now, what this means is that am I going to be investing in large companies? Am I going to be investing in medium-sized companies? Or am I going to be investing in smaller companies? So we're going to look at the asset mix here right now with the stock style exposure. So the large cap value, or the very large amount of companies, is going to be 14.05%. The large cap blend is going to be 25.65%. The large cap growth is going to be 32.63%. Then you have all this mid-cap value as well. And with mid-cap value, we got 5.15%, mid-cap blend 9.26%, and 4.96% for mid-cap growth. Then we also have small-cap stocks in here. We have 2.83% in small-cap value, we have 3.49% in small-cap blend, and we have 1.98% in small cap growth. So this is an amazing blend of stocks and bonds. Now, let's see what kind of sectors we're investing in as well, because as you pull this up, you can look at these stock market sectors and you can see that basic materials are 2.72%, consumer cyclical are 10.54%, financial services, meaning banks, things like that, are 14.04%, and then real estate is 3.62%. Then you have communication services at 7.19%, you got energy at 4.95%, industrials at 9.84%, and technology 23.1%. So if you're bullish on technology, this is technology heavy because the entire market is weighted very heavily with technology right now. Then we have consumer defensive at 6.53%. We have healthcare at 14.62%, which is you want a heavy weight in healthcare, and utilities 2.83%. So next, I want to look at the top 25 holdings inside of VTI because you want to know and understand how heavily weighted is VTI with some of these top 25 holdings. But first, I want to see the top 10 holdings. So as you look at the top 10 holdings, you're going to realize that these are companies that you know very well. And as you look at this pie chart here, you're going to see how heavily weighted these top 10 companies are within the pie chart. In fact, they are getting close to almost 25% of this portfolio. So you can see the top 10 holdings inside of VTI are Apple, Microsoft, Amazon, Alphabet, which is Google Class A shares, Berkshire Hathaway, which is Warren Buffett's company, the Class B shares, Alphabet, the Class C shares, ExxonMobil, United Health Group, Tesla, and Nvidia. Now, as you look at this, then you go to the top 25 holdings, and you can see after Nvidia, we have Johnson & Johnson, JP Morgan Chase, Visa, Procter & Gamble, Meta Platforms, Home Depot, MasterCard, Chevron, Eli Lilly & Co., Merck & Co., AbbVie, Pfizer, Bank of America, Coca-Cola, and Broadcom. So these are a ton of different amazing companies that I'm sure you know and recognize the majority of these, if not all of them. And so this is something where you can see, hey, I'm investing in some amazing companies that have been profitable for a very, very long time. And this is very important to know as well because the top 25 holdings of any index fund or ETF typically hold a very large weight inside of that index fund and ETF, especially if you're looking at something like an S&P 500 index fund, a total stock market index fund. You want to make sure you look this up to ensure that it is actually following and mirroring that exact index. So this shows us that there are top 25 holdings, all companies that we know. And so this is a fantastic way to look and see, is this something I really want to be putting my hard-earned dollars into? Now, I've owned VTI for years, and so here are a couple of reasons why I own VTI. The VTI actually historically beats actively managed funds 82% of the time, meaning that professional fund managers cannot beat the market, so why do we think that we can? Instead, I like to invest in the S&P 500 or VTI or Warren Buffett portfolio and create my own portfolio in order to build wealth. The second reason is VTI has such a low expense ratio. 0.03% is incredibly low for the market. In fact, that is one of the lowest expense ratios you're going to be able to find in index funds and ETFs. And that is why we like to invest in index funds and ETFs, because as you keep your fees low, that means there's more money compounding inside of your account. Fees will absolutely destroy your wealth building if you do not control them. That is why it's so important to keep those fees low. The next one is VTI is self-cleansing, meaning that the total stock market index is self-cleansing, meaning the companies that are struggling are going to be kicked out of the index, and the companies that are performing well will be brought up into the index and have a higher weight distribution inside of that portfolio. So you've heard me talk about this all the time. For example, in the S&P 500, when a company does not do well in the S&P 500, they get kicked out and a better company comes into the S&P 500. Well, the same thing goes for VTI, except for they're just weighted more inside of that fund. So this is an amazing way to have a self-cleansing portfolio as well without you having to lift a finger. In addition to that, companies that completely fail are just cleansed out of the index. They just will not be in the index anymore when they fail, and they will not bring your portfolio down significantly like what would happen if you own just 5 stocks. Well, if you own just 5 stocks and one of those stocks goes way down and it's 20% of your portfolio is going to go down 20%. That does not happen when you hold something like an ETF, where if one stock tanks, the other stocks balance it all out. That's the name of the game when it comes to diversification. Now, where is the best place to buy VTI? This is one of the biggest questions that I always get. There's a number of brokerages I absolutely love, but when it comes to ETFs, I love M1 Finance, and we'll link up M1 Finance down below in the description. But I love M1 Finance for one major reason, is that you can create these pies, and once you have these pies in place, you can rebalance your portfolio all with one click. So in the old days, for most brokerage accounts, what you would have to do is go in there and rebalance your portfolio manually. But with M1 Finance, you could push one button and your entire portfolio and asset allocation is rebalanced. So that's a really important indicator, especially if you are buying multiple different types of ETFs and you want to make sure you're still buying the same percentage. 2 other great places to buy ETFs are Vanguard and Fidelity. I've had accounts at Vanguard and Fidelity for years and years and years. In fact, my 401k is at Fidelity and my Roth IRA is at Vanguard currently. And so I'm putting generational wealth into these brokerages. And you can't go wrong with all 3 of those. Now, the one thing to note about M1 Finance is you can't buy index funds in M1 Finance, but you can buy ETFs just like VTI. So I absolutely love M1 Finance for just that. Now, if you want to learn how to invest in index funds and ETFs, we have a course called Index Fund Pro that will walk you through our entire system from point A to point Z, where you'll come out of that course learning exactly how to invest in index funds and ETFs. The link is up down below, and we wanted to make it affordable for everyone, so it's $99. It's under $100 to learn how you can invest and set up your automatic money system so you don't have to worry about it for the rest of your life. I hope you guys enjoyed this video. If you guys have any questions, make sure you leave them up in the comments down below, and don't forget to like, subscribe, hit that notification bell as well. And if you guys want me to do a comparison of VTI to VOO, make sure you leave a comment down below as well, and we'll create that video for you if enough of you leave those comments. Thank you again so much for watching this video, and we'll see you on the next video.